the question here, whether or not this is in fact a bubble.
Well, it is a question that we've had a huge run. However, commodities are attracting money for all the right reasons. No matter where they're produced, they have a universal price, number one. Number two, there's great demand around the world. And with uncertainty in currencies around the world, having commodities makes sense for investors. And then finally, investors have access to commodities like they never did before in the form of ETFs, whether it's precious metals, base metals, agriculture, energy. In the past, you had to buy futures, or you had to have the metal in hand yourself. Today, it's very easy to buy any type of commodity on an exchange.
So, Darren, let me just ask you, you look at this rally, how much of this is really based, no matter what happens in the short run with the dollar jigging and jagging around and the euro and the Irish punt and all the rest of it, is this an easy money rally? Is this a currency devaluation rally? And therefore, does it have legs?
I think it's had legs so far. I think a lot of it has had to do with the currency and pulling in more investment money. But as Tom just mentioned, one of the things that's really helping commodities out right now is that there is this underlying demand. So you've had a very strong investment rally, money pouring into commodities, but behind this, in many of these markets, you have a situation where the supply and demand has tightened to the degree that it's making things very interesting from at trying to source these supplies, possibly providing even more support.
I'd like to ask you about what's happening with silver, Tom, because I see here on your pick list amongst the ETFs that you do like the iShares Silver Trust. And I also noted this morning there's a little bit of funky stuff going on with the silver market, isn't there? I mean, investors who are reducing their exposure in the futures because of yesterday's margin increase by COMEX seem to be piling their money into the ETF instead.
Yeah, that's right. And, again, what the CME did yesterday in raising margin requirements is something that's done quite often. And again, when you see an area, especially in the commodities, move, these things are responsible. Because usually during hot markets, it's the weaker hands that come in towards the end. So they're just trying to protect the brokers from getting stuck.
What kind of impact would you expect it to have, though, a more lingering impact on the silver market, this margin increase?
Well, I think based on the prices that you saw yesterday, there was a quick hit, but then it recovered later in the day, and you're seeing recovery today. So it's to a great degree a non-event. It gets back to the demand and the amount of money that's flowing in. So I would say we're going to continue to see higher prices in silver, but I'm saying for investors that are going in today, make sure you have a stop loss in there. Make sure you use a moving average or something like that to have an exit strategy.
Rick Santelli, what does it signal to you when we get to the point where the CME now is trying to rein in the volatility and trading in some of these commodities by increasing margins, requiring higher margin cuts? I mean, what does that tell you? Is that somewhat symptomatic of a potential bubble?
No, I really think that story is getting overblown in a way that's incorrect. This is normal operating procedure. Whether it was in 1980 during the Hunt brothers or gold running up to its true high with regard to inflation at close to $875. This is what regulated futures exchanges are best at, is monitoring how much money is available as markets get crazy. They have a procedure called span margining that looks at a variety of factors to make sure the amount of money set aside is enough on any given trading day.
The market is, I mean, you just said the market has gotten crazy. I mean, when it starts to get to the point where it's a little bit crazy, does that mean it's time to start taking money off the table?
Commodity markets always get crazy, though. See, crazy is good here, and I'll tell you why. Because the government can't print soybeans. The government can't print silver. So what happens is, when the demand goes up, they get crazy because there's a finite amount of it, unlike everything they print, where nobody can figure out where things are supposed to be. But if you're looking for something to worry about, think about all the coverage we in-house have been given to ETFs. I like futures contracts because I know there's silver there, and if I want it, I'll get it. But ETFs, I still have questions about in terms of how they leverage and all these asterisks about OTC commodity traders turning into hedgers and coming back over into the regulated arena. That's what you should be worrying about.
Do one of our guests want to respond to that concern, Darren or Tom?
Yeah, I appreciate the concern, but if you look at SLV, it's backed in vaults in London. We spent a lot of time looking at the auditor reports, the trustees on these boards, it's clear, it's there, and there's surely
it's clear
physical
that
demand.
you can't get the physical gold if you want it. They can give you money. Read the fine print. That's all I'm saying. And I want to know how. I want to put somebody on who's actually seen the story. You think we can find somebody that'll go on and say, I've seen it?
Wait,
I don't think so.
Rick, are you suggesting that the silver is not there in the vaults? Is that what you're suggesting?
No, I'm just saying that I'm more comfortable with the way the specs are written in a futures contract.
Well, Darren Newsom, what about the ETFs themselves? Can the ETFs cover all the trading, particularly waves of short sales, if that happens? Can they cover that? Do they have the collateral behind it?
I think that's going to be interesting to see if that happens. Right now, I would hate to say, actually, because I honestly don't know the answer to that question. Certainly, it would be an interesting situation if a market started to collapse and certain things had to come into play.
Okay, well, British students, meantime, are letting the government know in no uncertain